He wants to sell the business. He hasn't sold it yet. That's the plan. He's going to sell it here in about the next month to month and a half. They're just working out the specifics. But he's terrified on the amount of taxes that he's going to have to pay because it's going to be a lot. Of the $6 million that he's going to get, if we don't do any planning, about $2 million of that is going to go to the IRS.
Wow.
We're going to have to invest something to make this go away, but it's not going to be $2 million. It's going to be a fraction of that, and you keep the rest. They're like, what do I sign? What do I have to do? Because it's their life's work, and I think it's only fair for them to keep that.
Raul, what's a big win that we've got surprised by?
So we had a conversation with a client who is going to have roughly around $800,000 in income this year that we're looking to offset.
What kind of business?
It's a technology business.
Technology?
Yeah.
So like SaaS software?
Mm-hmm.
Okay, so he's going to show $800,000 in income.
$800,000 in income. Last year, before he came to us, what he did as a tax strategy was charitable contributions.
So he donated to charity.
But he donated cash because he didn't have any financing component for that charitable donation. So he literally donated like $400,000 or $500,000 to charity.
Really? Was the charity his kids?
No, it was a legitimate charity. Yeah, it wasn't any particular structure where he was going to benefit any which way from that.
So that was the way he saved taxes last year. He said, "I'm just going to give away money to charity."
I'm just going to give away money to charity. I'm pretty sure it was a noble cause, maybe something that was close to him. But then this year, when we were having the conversation, I said, well, what if we could offset all of that income without you having to donate $500,000 to charity?
But just to be clear, how do you, so everybody gets this, how does donating to charity actually save taxes?
An individual can donate up to 60% of their AGI, basically 60% of their income to charity. And so
that's the max?
That is the max.
So you make 100,000, you can give 60 to charity.
You can give 60,000
and that just lowers your taxable income.
It lowers your taxable income by the amount of the contribution. So in your example, if you make $100,000 in income, you donate 60,000 to charity, your income is now 40,000, but you actually have to take $60,000 and give it to charity.
Yeah, and then you still have to pay taxes on the 40.
You still have
There's still a tax bill. It's not like you got rid of your tax bill.
Correct. Yes, sir.
So they did that in the year prior. This year they want to donate more. Was that the strategy when they came to us?
That was one of the potential strategies, but then I introduced one of our leverage strategies, which basically allows them to write off a lot more income, actually all of his income, with a much smaller contribution, and that's
less cash.
A lot less cash, and omitting a lot more income, and basically all of his income.
So basically, instead of giving another $500,000 to a charity, which is a very good cause, which right. I'm sure he was excited about, he could take less than that. How much less?
A fourth. We probably, once we're all in,
125,000.
I'd say about 160.
So 160,000 will take away we'll reduce taxable income to zero.
Taxable income to zero,
which means no taxes.
Which means no taxes. So last year he donated about 500,000 to make $500,000 of income go away. This
which
year
still did not get of his tax liability.
Right, that still didn't get him to zero. This year he's contributing 160,000 and making $800,000 of income go away.
So we used a Forex investment strategy, which is foreign currency exchange.
Yep.
Strategy that allows you to offset your taxable incomes
via realized losses.
The win for the client is now seeing that they get to keep more of their cash and not pay taxes.
Correct.
And this is a person who's in the technology industry, business owner, used to paying taxes, normally pays taxes, who's now in a position to pay zero taxes, leverage those tax savings by making a $125,000 investment. What's the returns?
About 10%.
So they'll get a 10% annualized return on the 125? Or 160 rather? 160?
On a portion of the 160.
Okay. Even if it's 4.5%, you're not giving away any money to the government.
Yeah, I mean, it's all the IRS's money. So we met with a client, a single individual, makes really, really strong W-2 income.
How much?
400,000.
Okay, so he makes 400,000. What kind of business? That's a high W-2. What kind of employee is he?
He's a high level management for an equipment business.
Okay, equipment leasing or equipment sales or
equipment sales.
Okay, so they sell like heavy machinery.
Things basically machinery and equipment for big contracting jobs.
Okay, for construction.
Yeah.
Okay, so he's an executive making 400,000.
400,000.
Cool.
The situation there and what makes it difficult for him is, well, he's single. he gets paid via W-2, doesn't have any business, really doesn't have any kids, doesn't have any deductions whatsoever. So
So he thinks he's helpless because he's been told that all his life.
absolutely, and that's very common when we get clients that just make W-2 income. They feel like there's nothing they can do. There's a lot of things that they can do,
And they rarely reach out to us
and
because they always say, no, this is not for me.
and the funny thing is too with um, people that make W-2 income, unless they're really smart and diligent about checking their pay stub, they never really truly realize just how much money they give the IRS.
They never look at the
'Cause
federal withholdings.
Out of sight, out of mind, right? It gets taken out of their paycheck.
Well, they just live off of what's sent into their accounts.
Correct. Yeah. And then so another one of his concerns was he does a lot of professional development things for himself to be able to be a good professional for the company that he works with. But since he doesn't have a business, there's really no way for him to write off any of that. So he'll do conferences out of his own pocket. He'll travel. He wants to get better, but he's an employee. So there's like literally no way for him to write off any of that. So we had a conversation. We told him about some of our strategies, one of which, ironically, has to do with equipment, where we basically build him a business where he owns equipment and he's able to lease that equipment out. And so now via that business, not only can we basically wipe away all of his W-2 income, but at the same time, all of these expenses that would go unrealized, well, now we can factor those in through that business that we're creating for him. We have a client is getting ready to sell a very, very successful business that he's built from nothing. Very excited.
How many years in business?
I believe around 10. But I'm not
10 years? That's not that long. Is this his plan to sell? Has he always wanted to sell?
I don't think so. It's just he got an offer and the offer is right, so he's going to sell.
So does he have children, by the way?
He does.
He didn't want to give it to one of the kids?
Well, they're young.
Ah, so he gets to spend the money on them now.
He gets to spend the money on them and the wife.
Okay.
He's selling it for $6 million. So he's not going to get, the wife's going to get $6 million.
Okay.
She's going to be very happy. But he built this business from nothing. So this is a blessing, but it's also a curse because the taxation is on the full $6 million of the sale of this business. And he is freaking out because he wants to sell the business. He hasn't sold it yet. That's the plan. He's going to sell it here in about the next month to month and a half. They're just working out the specifics. But he's terrified on the amount of taxes that he's going to have to pay because it's going to be a lot. Of the $6 million that he's going to get, if we don't do any planning, about $2 million of that is going to go to the IRS.
Wow.
So we're talking, we have a strategy for him. I already know exactly what strategy we're going to use. And he's going to use a fraction of that money that would otherwise gone to the IRS to offset his entire tax liability and keep the majority of that $6 million.
So you reduced $2 million to what?
Of the $2 million that he would have had to pay in taxes, we will probably use around $500,000 of that.
Wow. So you reduced it by 75%.
That means $1.5 million more in his pocket that would have otherwise gone to the IRS.
What did he say when you told him this?
I usually get the comment, this has to be too good to be true. And it's like, it's not that it's too good to be true, it's that you've just been talking to the wrong people, right? Because we do this all the time. I think a lot of people have this misconception that these individuals that have built these businesses and they're having these massive exits, that they're these, high-end, stuck up people. They're not, man. They're common people that came from nothing. They built from nothing. And so it hurts them when they built this business from nothing, and all of a sudden $2 million of that, they have to give it away to the IRS. They're like, man, I put my entire life into this. I mean, it's time sacrificed with family, time sacrificed with kids. So when I tell them, look, we're going to have to invest something to make this go away, but it's not going to be $2 million. It's going to be a fraction of that, and you keep the rest. They're like, I mean, what do I sign? What do I have to do? Because it's their life's work. And I think it's only fair for them to keep that.
I agree with you on that.
Who do you think our ideal client is, or the client that we want to work with?
You know, our ideal client is going to be somebody who's ambitious, and ambitious people make money. Let's just be real. They are driven to succeed, and they come to a point where they feel like that success is being punished, that they believe in paying taxes, but they don't believe that they're getting their fair share, right? They believe that there are other people in the system that aren't paying their fair share, and they're overpaying to compensate. And they are in a position where they have to make some decisions, and they're like, man, I want to buy my first rental, or I want to invest in a business or expand my business, but it's limiting them to continue to think, well, if I do that, I have to think about the tax bill that's coming, or I have to think about my financials. That, they always have these concerns. And so What I believe is that the ideal person for us is somebody who's in the position where they feel stuck and they may be working with a very qualified accountant, but that person is either too busy or lacks the knowledge to be able to advance or to help them with advanced strategy. And a lot of tax professionals today want to help their clients, but they typically expense them to savings rather than invest them to savings because they just don't have a an understanding that taxes is not about expensing or deducting, it's about investing. And so if the client is somebody who likes to invest, who's making a lot of money, who's tired of overpaying in taxes, that's who we want to work with. That's the ideal person that I can help because they have the best opportunity to win. And that's what we want to do. We want to win together.